Okay, the Twitch stream is up. I will link that in the trader chat once more for you guys. All right, good evening. Good evening. I hope everyone had a good day in the market. All right, this is my first stream with Atlas. PJ has been wanting to push a little bit more education out, helping a lot of these newer traders, especially during these difficult market conditions. So I'll give everyone a few minutes to port into the Twitch stream. I know that Discord will fill up rather quickly, and only one stream in the Discord can hold 50 people. So. Also tonight's stream, right? I am a large cap options trader, right? I used to trade small caps, have kind of branched away from that. I will touch on a lot of points where newer traders feel that options are scary, and truly options are just another trading vessel. Sure, it's fine to understand how to trade the basics of commons or just equities in general, but options for myself, the biggest hurdle was understanding the chain, right? Understanding the chain and the relationship between volume on the options contract, theta and delta. Theta being the rate at which your options will decay, right? The kind of health of those options, as well as delta being what you are paid per contract, right? Over the rate of time. So, just making sure everyone has time to get in. Hello, right? I hope everyone had a good trading session as well today. I know that it was a bit kind of stagnant with the FOMC minutes being released, but once that was released, we saw a ton of volume push through. So. Yes, it is being recorded. It'll be on the Twitch pod as well as I will upload it to my YouTube channel, right? So we'll give a couple more minutes. Can you guys hear that dinging going on? I think people are following the stream, but do you guys hear that dinging? No? Okay, good. It's just me, so I have to suffer, but I'll be okay. All right, I guess I'll get it started, right? Quick introduction, right? I go by Maple, right? Maple Sacks. I've been in Atlas. I used to trade. I still trade in the Momo floor or Momentum floor. Used to be called Scout Team for a lot of you OGs. Everything that you need to learn is right here in Atlas. Just to start off, one of my favorite videos that helped me out. Let's see. One of my favorite videos that helped me out was in PJ selection, right? If I scroll up through here, let me see if I can find it. No, not that one. This right here. This is, yep, that's the one. God, there's an ad. Okay, I will post the link in there, but it is this. He's in this Discord too, I forgot. It's Naked Trading, right? Naked Trading, how to trade price action trend in stocks, options, futures, and Forex. For myself, my trading kind of strategy is very simple, okay? I do not use a ton of different indicators. I keep it rather simple due to the fact that the basic kind of strategies and skill sets provided. You know, a lot of you guys understand support and resistance, supply and demand. Even heard of VWAP and 9 and 20 EMA. Those are my main cores to my trading strategy, simply due to the fact that those are some of the most common and most used indicators or strategies or skills in retail trading, right? Or trading just candlestick charts. The reason that I enjoy them so much is because since they are so common, since everyone does know 9 and 20 EMA, VWAP, supply and demand, all of those things, they add that much more strength, right? I know that there are algorithms and traders that solely trade off of the 9 and the 20, right? So that's one perspective. That's a whole kind of point of view from a lot of traders, right? Hundreds of thousands of traders, right? I know that traders use supply and demand. And that is another group of traders, right? Giving me confluence. If I can use supply and demand incorporated with my 9 and 20 EMAs, I now have 2 points of view from various amounts of traders, right? Different participants in the market that allow me to add more strength and confidence into said entry or trade. So let's see. Going through here, right? I know that it's been pretty choppy today. I'm going to use just a few examples from some trend days, right? But let me blow this up. I trade options. This is QQQ. A lot of traders don't agree with the way that I trade options, I guess. I like trading the closest expiry. And by using that closest expiry, I'm able to, scalp with volatility and momentum, right? I always preach and practice proper risk management. If you do not have an entry, exit, and target, before you are taking any trade, if you're just taking an alert, you're seeing someone post on Twitter, anything like that, then you are already setting yourself up for a failed trade, right? Tonight's kind of topics will be covering the basics of day trading in my point of view, right? A lot of you may have different experiences in the market. This is my experience. This is what works for me. This is what I do every day, and have been a profitable and independent trader for the last, 2 years or so. Yes, I am live. Live trading is asking if I'm live. So, but going through, right, 920 EMA in a basic sense, you want to be able to use the 9 EMA as your dip entry. Okay, I'll just show a trend day just for an example, right? And I want to talk on as well. I have a ton to talk on. I probably won't be able to cover it all tonight, but we will go over it. So the 9 and the 20. Now, I know a lot of you guys trading small caps don't take bearish kind of perspective or short perspectives, right? But trading options, the benefit of it is that you can trade calls to the long side and puts to the downside. Now, price action in both ways, I trade them the same, right? You can trade. Let me just draw a big circle so I don't. Well. But you can go, if you're on Thinkorswim, you can type a negative or a hyphen, right? And then you can type like QQQ. And it'll give you the short perspective. It'll flip the chart upside down. Okay, so this chart that trended, you guys have seen small cap trades that have this chart, right? But this chart is flipped upside down. This is going down in reality, okay? But it's the same setup, same technicals apply, same, kind of risk to reward, everything like that. You're just trading in another direction. Now, if you really limit yourself to only trading long, especially with day trading, perma bulls, kind of you're losing half of the amount of opportunity with those trades. So in a general sense, okay, I like using the 9 and the 20 EMA on multiple time frames. Okay, I use the 1 minute, 3 minute, 5, 10, 15, 30. It depends on what my time frame of trade is. If I'm doing a kind of swing scalp, I'll hold for 1 to 3 days or something like that, then I'll be on the 30-minute or the hourly, right? But if I'm intraday day trading and if it's on heavy momentum, I might be on the 1, 3, or 5. You have to look at what time frame is being best respected on the chart, right? I see a lot of yes, I will go over that as well, Rob. Discord caps at 50. You have to be on Twitch. Okay. Yeah. Okay, so I think you guys should be able to see, right? So using what time frame is best respected, I can already go through here and say on the 1 minute that this 5-minute EMA time frame is not going to be respected, right? Let's see, where'd it go? Right here, right? You get little pieces. Now, what I mean by this is that when you're trading on the 1 minute time frame, you may just be in it for a scalp, and your goal trading on a smaller time frame is to just take pieces of the chart, right? I'm talking about little legs. I know that everyone wants to encapsulate the entire movement of the chart, but that is not always a reality, okay? This was a very simple day for trading, right? Because it just moves down. You just short every pop, or, you know, buy every kind of higher low if you have the chart flipped upside down. This is currently on the 1 minute. But you can see here, the 1 minute EMAs, they give you, you know, you would stop out under the red level, right? The 20 EMA right there. You'd get your dip entry here on the 9, stop out under the 20, right? That's typically how I would trade an EMA on really any time frame. But you can see here that you're just taking little pieces and then you get stopped out, right? You're getting little pieces. So if you're trading on a smaller time frame, you have a smaller time frame trade. You're not going to be in that trade as long. Okay, now let's say that I swap this over to the 5. Okay, I swap that over to the 5. I'll clear the chart out once more. Okay, now you can see that the candles are not strongly closing under the 20 EMA, meaning that you would not stop out. Okay, the 9 and the 20 EMA are very, you know, it's a very strong setup for trend days, especially for chop or consolidation days. You don't get too much use of them, and that's why I was a naked price action trader. I trust price action much more than EMAs in any sense, and even if the EMAs were being negated, I would check my pivot points, right? I will touch over pivot points right after I get through this 9 and 20 EMA. But going through, you can see here that, hey, you could have taken a dip entry here on the 9 or 20, or even right there, right? And it would have held you in the trade because this red line is not closed beneath or broken through all day, okay? Yes, you should close your, you know, day trade options, you know, if there's 0 DTE or closest expiry or whatever, right? Just locking in as much. I am a day trader. I like coming into the day and being able to be all cash at the end of the day. I might have an overnight or swing here or there, but be all cash, do all of the work that I need throughout the day. I'm typically done around 1 or 2 o'clock. And then that allows me to, 1, sleep at night like a baby, not have to worry about extra market conditions. And I am prepared each day, each morning, to trade either long, short, or chop. I don't care if it's trending, if it's ranging, if it's consolidating. I know exactly what to do in that moment, right? And it does take a lot of time to get to that point, but in order to get to that point, you have to be able to do a nightly review. One of my strongest things that's helped me alongside in my trading journey was at least charting 3 tickers a night, right? 3 tickers or 3 trades, whether they be winning trades or failing trades, okay? Yeah, I would definitely explain this on a non-trend day. So like this, right? You saw that the day, a couple days prior, very simple EMA trend. Now over here on this day, your EMAs are not really useful to you, right? There's no dip buys, there's no support being presented to you. This is on the 5 minute. This is pretty standard. When I watch my quick charts here, I watch NQ, VIX, and ES or SPY, and they're all on the 5 minute because I'm a day trader. Yes, it will be recorded day trader 18. But off the open, this is not useful to you, right? I mean, you're getting no benefit here. So what did I tell you guys just a few minutes ago, right? I'm a price action trader. Okay, I understand support, resistance, supply and demand, the relationship between the VWAP, okay, and price action. So off of the open, you get a big spike up, rejection. You have resistance. Okay, and then off of that, you bounce down and it bounces up, right? Now you have support. Now you can see this. This is a range. A lot of traders, this is probably going to, I mean, I have so many kind of epiphanies with trading that, I mean, you know, you're going to have to go through your own trading journey to experience them yourself, but understanding them in tonight's live session, it will help you tremendously, right? So, yes, this is still the inverse of the Qs. Going over this, right? you can see that a lot of times newer traders, they're going long, right? So that means they're buying into something just solely off of the green bars, right? But you always have to take into account the short perspective. You know that the short's stop loss is right here. If they close above this, they most likely will stop out, but not always. Most likely is the key word. So when it pushes up, it most likely will not, or sellers will most likely not cover here unless they get a strong sense of, weakness on their kind of defense of their position size amongst other traders as well. So my rule of thumb is that you should be going short on upticks. And why is that? Because the risk to reward is small. Or the risk is small and the reward is large, excuse me, right? So if you take a short here, you're not going to stop out until this level breaches, right? This high of day. And if you go long down here, right, that kind of feels scary. Going long, you might feel like that's a knife catch, this or that, right? But I'm always trying to find something to base risk off of and trying to take an entry as close as possible to that risk level. So what I mean by that is that, if it's shoving down here and you take puts on the down tick, right? That's not right, because the only reason why this does knife through is because these buyers stop out, not because of the immense amount of short selling pressure. It's the added pressure between shorts that have shorted in this zone up here, shorts that have shorted here, and putting pressure on those longs, right? The bulls that have bought down here and forcing them to stop out, right? That's why you get these knives. It's not a short attack. It's not this or that. It's just one of the two traders, bulls or bears, stopping out or covering. That's what forces that. So breakout trading, especially in a kind of chop or consolidation market, is not beneficial. And in the long run, you really need to be able to focus on dip buying and buying as close to a resistance or support level, depending upon if you're playing long or short. Okay. Trades, it is on Twitch, right? We've posted the link in the trading floor. Discord has a cap of 50 viewers. There's no way to override that, so we're all on Twitch, right? Yeah, you can check the trading floor. It's posted in there. So going through here, right? You should be going long when it dips down, okay, as close to that resistance as possible or support as possible. And when you're trading puts, you want to take a put as close as you can to that resistance level, right? Because that's where you're going to stop out. If you go short here because you're trying to preemptively take a breakout buy thinking that, this is going to happen, right? A big knife through, you think, oh, I'm getting in early. I'm so smart, right? This is what's going to happen. I'm going to be making money before everyone else, right? They rip it right up in front of you, and then you get washed out, right? Negative 20, 30%, whatever, right? Compared to if you went short up here, as close to your resistance as possible. If you stop out, that's maybe 5-10% depending on the expiry and contract that you're trading, okay? And then now when it shoves down, you're already making money. You end up selling to those breakout buyers, right? Those breakout buyers are your liquidity. You're making money and they're stressing out, kind of scavenging for crumbs down here, okay? Now, a lot of you guys want to talk about some of my key setups. I feel like the key setups are great, but you have to understand the basics of TA first. I know a lot of you traders have been, you guys have been trading for a few years now, or, depending upon your experience, whatever. Yes, this is still on the 5-minute. I'm always looking at the 5-minute, but understanding your pivot points, okay, and knowing when a trade is going to reverse versus when a trade, is still staying within its trend. Okay, so I will clear this chart out completely. That pivot point video that I posted in the trader chat, you guys should watch that. It's a little bit long, but this will kind of consolidate it for you. Your pivots, if you're in your nightly review, you guys should be just marking, right, from a very basic sense for technical analysis, your pivots, right? So you can say that's your high, right? Start off with one side. Don't go back and forth. Just start off with one side. Okay, a lot of times traders, when they see big green candles, especially in a downtrend, this is where they FOMO buy long, okay? But it's really just a lower high in the major trend for those shorts to shove it on down, okay? So going through here, you can see lower high, lower high, right? None of these pivots are being broken. And if the pivots are not being broken, that means that the bearish perspective is still valid. Okay, you can see here, not broken, not broken, right? So why are traders buying long, right? They feel like they can get in early into a trade. They can, get much quicker profit if, being early, all of that, right? But you should truly not go long until one of two things happen. Okay, if you're going to a downtrend, right? If you should see a higher low and a higher high, right? One of those two things, right? To show the kind of integrity of the opposing direction or sentiment being shoved down, right? Or them being weak. So you see consecutive lower highs here through the day and consecutive lower lows. You can see that that support level failed, right? Another support level here, failed, right? Another support level here, failed. Those are all lower lows. Someone is asking, what is hidden supply, right? Hidden supply, I went over this today in the large cap options channel. When you are going through here, right, this is on a 5-minute, a much smaller time frame, okay? You can see like on the 30-minute, you don't have a zone here. You don't have a zone at all. This is just a flat kind of, straight bar, no wicks, no breaking, because it's a 30-minute orb. Okay, now you go here on the 5-minute. Now you can see here, this was the pullback before it shoved down. So this was the most recent area where short sellers shorted before this shoved down. Okay, so I don't have a supply zone up here, maybe way up here, but this is not interacted with until FOMC minutes are released, right? So this right here, hidden supply. Okay, you draw that supply zone out. Now look at how this was respected. Okay, above this is why breakout traders get punished. Okay, especially in this type of market, when it pushes through, right? They're like, oh, we're breaking out, right? Those shorts are going to start covering. We're going to squeeze them. Now, understanding FOMC minutes and understanding the lack of volume throughout the day, and especially the market environments the last 2 weeks, I'd say. There hasn't been that strong sense of urgency or sentiment in either direction, right? There's a lot of indecision and confusion. So when it pushes through the supply, this is that area of liquidity where those short sellers will keep their their ask. This is like their dip buy, practically, that area above the hidden supply zone. And it's respected once and twice here, right? These were two great trades from today, all marked off of that zone. But on the 30-minute, you don't see it. Okay, that's hidden. There, you would have gotten no data there. You wouldn't have even been able to understand that this was going to be a pullback and this was the overall resistance. So that was a hidden supply zone that we went over today. Do the volume bars help you in a way to determine the trend? At times, right? I truly don't use volume very often throughout the intraday. Now, maybe in certain instances, understanding, the current kind of sentiment of the market, or the direction towards either way, right? Sure, it helps, but truly I'm focusing on candlesticks day in, day out. Okay, so supply and demand, right? I've covered this before, but I'll go over it now. For supply and demand zones, I love trading them intraday. I can show you guys how I draw them and how I use them each and every single day. I have two methods for supply and demand zones. I need to see a large bottoming wick, right? So off the base of this day, right? When it bounces up here, you get the first bottoming wick. This is where that first buyer steps in, and it takes immense amount of buying pressure here to reverse the trend, right? So I'm going to draw a box. Okay. You extend it out, right? Look how this demand is respected all day. 1, 2, 3, 4, 5, 6, 7, 8 times it is tapped. Why is this such a strong zone? Because the low of the day is your risk. So if you buy as close to that low of day as possible, remember, I've learned some great things through from Palmer. Palmer's also from Atlas, or has traded in Atlas a long time ago. He likes to do descending bids, right? So he'll take a feeler towards the top, right? A larger position, maybe 25%. Heavier position here, maybe, another 25 or 33%, right? And then a larger position as close to this support level, right? That stop out risk, right? And those are descending bids. So that's how I drew this zone, right? I draw zones off of these upper wicks. And you can see just that wick, it is respected, right? We can show a few more examples here, especially with supply and demand. Okay, right here on this day. right off of the open, big bottoming wick. Draw your box, extend it out. Remember, don't cheat. See, 1, 2, 3, 4, respected. It breaks below a little bit, but instantly flashes back up. Those breakout buyers are punished. You would rather be a dip buyer, right? Buying near the supply. Now, this is the other way that I like to show supply and demand zones, okay? I need to see small tight body consolidation prior to a large move down or up. So you can mark from the base of this wick and see this small tight body consolidation. I'll draw that out. You see what I've drawn here? Edit properties, I extend it out, respected there, right? That is a top tick entry. You could have taken a trade from zone to zone, and those are one of many of my favorite kinds of strategies or setups. So, and why? I mean, it's all about risk, guys. A lot of times when you guys are trading, if you guys do trade the 9 and the 20 EMA, this is why you guys get burned, okay? Now, the 9 and the 20 EMA is not going to tell you when to exit or to scale out. It will tell you when to stop out or the overall gauge of the trend. But when you get a big red bar like this, right, what emotions are experienced, right? You're experiencing fear, right, of missing out, FOMO, right, anxiety, right, greed. You're experiencing all of these. But there's not much meat left on the bone, right? People have already made money. You can't expect this to be replicated and presented to you just because you're late into the trade. And remember, these earlier traders who put in the work with the technical analysis and gauging of price action between bears and bulls, right? They are rewarded compared to the lazier trader who has not, taken advantage of this trend, right? Or has hesitated, will then have these scraps, right? Your goal as a trader is not to get the absolute top and the bottom, right? But to get and encapsulate the meat of the move, right? The middle, this big volatile kind of area. You just want momentum, okay? Getting in and out as being a day trader, right? I'm trying to keep up with chat. I got Twitch chat and Atlas chat, trader chat. So, but going through here, right? Seeing this space in between your EMAs, that means do not buy. Okay, yes, you may make money extended from it, but it is best for you to wait for price to come back to the EMA as close as you can to base risk off of, right? You know that, hey, if price pushes up above and closes on the 20 EMA on the 5 minute, then I will stop out, right? You see this big space presented to you between price action and the 9 EMA. Do not go short, right? Wait to see how price is going to react. Look at this. You get a tweezer bottom. That's a reversal sign, okay? You get a level where buyers have come in, placed their bid, and are not allowing any, any price to close below these or this level here, right? Let me mark price level, right? 34 or 344.25, right? You have a tweezer bottom, and that tweezer bottom signifies a reversal. Okay, going through here, cover long-term strategies. I'm not a huge long-term trader, so I can't help you there. 9 and 20 EMA for both long and short. Sure. So going through here, you can see that the 9 and 20 EMA are respected. Right here, the dip buyer is buying under not only VWAP, but the 20 EMA. And the 9 is above the 20, meaning a bearish trend for the time being, okay? I also want to note this. Remember the pivot points, right? If you don't use EMAs, mark your pivots. There's your support. Remember, even though that it may crack a lower low, right? It may crack below. As long as it doesn't close below, it's still, that support level still being maintained, right? Buyers are just aggressively maintaining this, okay? You have this. You're not getting any higher highs, lower high, right? Or higher high in this micro, but lower high in the overall trend from this current high of day at that given time. But you're still moving the bid up, right? You're getting higher lows along the way. You still have that integrity of the base, right? The higher lows moving up. Once you get a higher high, right? That's where you lock in profit. That is always your goal as a trader. If you take an entry on a dip for a higher low entry and you get a higher high break, you need to be scaling out. This is where you lock in profit. If you don't, they will take it from you. Okay, the integrity, look at this. Higher low still being maintained. I'll extend it out to the right. Higher high, right? Extend that out, right? Let's mark the low now. Look at the low when it dips down. Oh, now you get a lower high, right? lower high from this level, and lower low. Now the trend shifts, and you have what, from 120 all the way down to, you know, it's about 30-40 minutes right here of downtrend, right? Also, one thing that I want to talk about, you know, is momentum, right? Gauging whether or not, you know, what time frame to trade amongst your EMAs. So right here, I'm going to just draw an arrow just so I don't lose my space. But right here on the 5 minute, you only get truly one entry on this downtrend. Okay, you only get one. And it's the interaction with VWAP, right? Let me move over to the 1. Right? So we only had that one entry. I will make a note here. 5 minute EMA pullback right there. Okay, now I'm going to give you all of the entries on the 1 minute chart with momentum. Okay, a lot of traders are scared of using the 1 minute, this or that, right? It's just because they don't know how. They haven't spent enough time with it. So you have a pop up to your 20 EMA entry, right? Pop up to the 9 EMA entry, pop up to the 9, once again entry, 20 EMA entry here, shoves down, pushes up to the 9, right? Green candle pushing up, entry. Green candle pushing up, touches the 9, entry, right? My biggest rule is on momentum. The later the entry, right? This chart has extended to the downside, right? Has de-escalated to the downside. Later entries dictate quicker profit taking. So, meaning these traders have the luxury of holding on to the trades, right? This trader here is looking to take a scalp. You're looking to take profit, taking whatever the market can give you with an appropriate stop loss, right? That being the 20 EMA. Now you can see here very early on for the reversal, we talk about pivots, right? There's your lower high, lower low, lower high, lower low, right? Then you get this base right here. You get a double bottom. You move it over, right? You had this most recent high, lower high here, right there. Now you get a higher high and a higher low, right? So I'll mark that out. Higher low, higher high, right? This is the signal of the reversal. What happens after that, right? Major downtrend. You get your higher low confirmation and a higher high in the micro. You also close the first candle, strong candle above the 9 EMA. You can see here no candle closing above the 9 EMA very strongly, okay? First candle closes above, look what happens the rest of the day, okay? You have a bullish trend. You make money on all of these pops. Don't sit there punching the air, right? Stuck in a put, stuck, you know, from being able to flip sentiment, right? Understanding your pivots. Your pivot points are going to tell you the gauge and which direction the trend is currently going. Always ask yourself, is it, you know, do we have higher highs and higher lows, or do we have lower highs and lower lows, right? Are we getting a mixture? If you're getting a mixture, then you're probably going to see some point of reversal or weakness in that given trend, okay? So, covering through here, let me go through my notes, right? For the EMAs, just a quick note, the best time frame for myself, especially to simplify it, I know the 1 minute is kind of scary for a lot of traders, but the 5 and the 10 minute is really what I enjoy trading on. When I am scouting trades, I am looking at, or potential tickers to trade, I'm scouting on the 10 minute. Also, let's see here. What was I going to say? I totally forgot. I enjoy using, of course, supply and demand. I like using daily levels. Some examples here on the Qs. I like previous day highs and lows. So if I clear this out completely, why did QQQ bounce here, right? Why did it bounce here? This was a daily level, right? That's the high of the day for this day. This is where it bounced. Also, this is the low of the day. Going into the next trading session, I always mark the pre-market high and the pre-market low, and the previous day high and the previous day low, right? The most recent data presented to me in order to make a trade. You can see this previous day low level, that daily support compared or combined with this daily resistance level created a demand zone. This was that area of soaking for the longs, right? Waiting for FOMC minutes. Why did they soak here? Because underneath that, they stop out, right? I only use 9 and 20 920, and the 200. This orange line is the 200 EMA. Also, I want to touch over the 200, right? I enjoy using the 200 as a gauge of kind of overall. It's like, I don't know, it's hard to explain the way that I like to use it, but generally it's it's either being used as resistance or support, and I need to see it either broken and based upon, or rejected to continue in that certain trend. So you can see here, this is on the 10-minute 200 EMA, right? Acts as support, right? Acts very closely as support. Support once again, right? Now you close, you break below it, and it pops up, and you get a lower high, right? Lower high in this trend. Okay, that's the first sign of weakness. Then you get a big knife down on close. This is that Facebook ER kind of day. Now, on the downside, right, this previous support will now be used as resistance. Okay, you can see very closely here, resistance, resistance, right? Pops up a little bit higher, right? And this is trading. I don't solely use one strategy over the other, right? Always gauging what is the strongest kind of indicator that's being respected at that given time. And at this given time, the 10-minute, 9 and 20 EMA was being respected, right? We're going through. Now, one of my favorite things as well is a break through a level, a base, so a retest, and then continuation in either direction, right? A break and base. And that break and base is that previous resistance then being used as support. You also have confirmation there with what? VWAP. So you have two perspectives. You have the 200 EMA as well as VWAP here, right? That's giving you a strong sense of confluence in order to develop a risk. How long have we been blabbing? 36 minutes, okay. And then going through here, right? Resistance, 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 right? Breaks up, bases. Now, this was a very early on in pre-market, right? It breaks down, bases on pre-market, shoves to the downside, using those previous daily level support and resistance as a demand zone on the intraday. Also going through here, we've covered going on long on downticks and short on upticks, as well as I really recommend you guys, if you're trying to learn to day trade options or whatever you're trying to learn to trade, right? Focus on learning the personality of 1 to 3 tickers, right? My favorite tickers to trade, I have a handful, but off the top, I trade QQQ every day. I trade AMD every day. I also trade Boeing, right? Those are my kind of top 3. The AMD and Boeing may get, shuffled around, but I'm always trading QQQ. Yep, QQQ is for me. I enjoy trading it because I can watch NASDAQ/NQ futures right here. And I kind of respect these EMAs much more than the intraday EMAs. Yeah, do I have a predefined set of stocks for options day trading, or are they done? Yeah, I'm always trading QQQ. A lot of you guys trade SPY or look into trading SPY. SPY is great. The benefit of trading these index tickers, right, is one, you have a tight spread. Let me see. Tight spread, right? You can see, I mean, this is the end of the day, right? So, and this is on 0DT, but we can go like the next expiry out Monday. Tight spread right there. That's an 8-cent spread. Okay, so $8, right? This contract costs $397 per contract. Right here, this is like a, $8 spread or $7 spread right there. Pretty tight. Also, look at the volume. Volume is pretty good. You can see that we have, on the 0DTEs, 10,000+ on each contract. And then on the next expiry out, you have at least 1,000. Normally when I'm trading, I need to see at least, 1,000, 1,500 for volume for me to understand that, hey, my trades will be liquid. And when I am ready to get out of a trade, then, I will be able to not have to struggle getting filled. And it will move alongside the underlying, right? When you trade something like Pepsi or Honeywell or, Walmart, sometimes they're too illiquid, even Target sometimes, right? We can go through here. Look at today. Look at the volume here. See the volume 386, 430 is very, very low. These are not things that I enjoy trading. One, because if I call them out, a lot of traders are not going to be able to capitalize upon it. And two, I mean, it's not liquid, guys, right? I can go over the small account affirmations that I read every morning on my stream. Let me go over that in the trading floor. This is also on my Twitter if you guys want to check it out, right? I read this every morning. Let me get back in Atlas. And I'll just read them quickly, right? You guys can screenshot this, whatever, right? But 12 small account affirmations. If you're a newer trader struggling with growing your account and you just don't have a set of rules, these are great to read every morning. I read them probably about 10-15 minutes before the open just to get my mind in tune with the market and a, kind of grip on my emotions. So number 1, right? I will only play quality setups. 2, I will not chase at open. I will not FOMO. 3, I will buy what is appropriate for my account size. 4, I will cut my losses quickly when I am wrong. 5, I will go for base hits, not home runs. 6, I will not overtrade. 7, I will only trade where is volume and liquidity. We just talked about that. 8, I will not FOMO into other traders' ideas and alerts with no preparation. 9, I will not let a green trade go red. And on number 8, this is what I talked about at the very beginning of the video. Or the stream, right? Just because there's a call out, maybe you trust this person or you look up to this person as a trader. Do not take that trade until you make the trade your own. I'm going to read into this, right? It says, I would rather take a win or loss based on my own preparation and execution than rely on someone else. I will only take an alert if I agree with their thesis. I will make the trade my own, okay? Continuing on number 10, it is okay to be wrong. I know that if I follow my system and stick to my rules, then I will be successful in the long run. Okay, number 11, I will do my best to control my emotions. And 12, I will never give up, right? I feel like that's the most important one. Can I share the Thinkorswim layout? Sure. Right here, setups. I will go over a few setups that I enjoy trading. Right, we talked about tweezer bottoms or seeing a series of bottoming wicks right there. That is showing a strong sense of buying. When I see this, right, and I see that first candle, this means this is that buyer's bid, right? They've left room to average down, okay? When you're taking a trade, you should never, your first entry should not be your only entry. You should be able to scale in. I like to scale in, a quarter at a time. And that gives me, kind of a gauge of price action, slowing my kind of trades down and allowing me to, comfortably get into a trade with proper risk, right? So I like to see large bottoming wicks. I also like to see rounding tops or respect on EMAs. There is a doji method that I go over. This helps me out a ton. I also have a YouTube video on this. Let me see if I can find one. I traded them the other day. These are used for reversal points, right? Let's see. Right here. This is good. Okay, going through, right? This is a doji method. Now, when you get a big push up right here, right? And then you're looking for that initial doji, right? So you'll mark this. You can call it gravestone doji, hanging man, whatever you want to call it, right? You're going to look at this doji here. Maybe it's better on the 10. Let me go on the 10. 1 second. Scaling in with a small account? Sure, right? I know a lot of you guys trade like one contract at a time. Completely understandable. Right here. This is exactly what I want. So you get a big push up here, right? You mark the first doji. So what I do, I mark the high. I mark the high of this and the low of that, right? And now what you're going to see here is that the body will be the area to fight over, right? That tug of war level. So when you push through here, right? Remember, what's the rule? You want to go short on an uptick, right? If you want to go short, right? It depends on your context of the trade, right? And then you go long on a downtick, right? Close as to that support as possible. You do not want to fight or take a trade here in this kind of no man's land area. And due to the fact of this no man's land area is that the risk to reward is 1-to-1, right? You'll get chopped around. If it pushes up, You're making money. If it shoves down a little bit, right, you're losing. It's not enough for you to scale out, within this range, right? Enough for you to lock in profit, and it's not enough for you to stop out. And you're just kind of getting tossed around with price action. It's not the, most favorable kind of entry, right? You should tighten it up and refine that. Going through here as well, you have this doji bar right here. This is that line in the sand, right? Imagine this is like tug of war, okay? You're looking for the first candles to close into either the upper wick or the lower wick. Look what happens here. You get the first candle closing above the body, right? This zone that I've drawn on the body. You get the second candle closing above, right? What does that show you, right? Through reading price action, remember, you should always be gauging the relationship between bears and bulls, right? The dialogue, understanding, which side is showing strength and which side is showing weakness, right? And when you're getting candles closing above into this upper wick, that shows that the shorts are beginning to cover, right? They're alleviating a bit of their position size. So when that happens, right, first candle close, second candle close above, your goal, if you're in this doji method long, is to see a candle close above the resistance, right? Showing that these sellers are now stopping out, and now it's going to squeeze, right? For those sellers who are not covering, right? So when this squeezes, you got all of this squeeze here solely due to the fact that you marked out this doji method, right? Seeing the candle closing above the body or the base of this tug of war kind of line. So guys, I know that there's a lot of differing opinions on breakout, buying. I am not a breakout buyer. If you can understand that, hey, we're closing candles above into this upper wick, on the shove up, you can buy that, right? Because you're taking away those covers from those shorts. If you're buying, commons or if you're trading long, it's different, right? But you're still understanding that perspective for the equities. Going through, right, you can take the breakout. I would much rather buy the dip, right? Because if you buy the dip as close to that resistance or that support, you also have confluence here with the 9 and 20 EMA on the 10 and VWAP, right? So you have multiple levels of support to cushion you, as well as that doji method support. So yes, you can take that, but it doesn't always work out. Remember, the dip buyer is going to be much more protected. I've taken probably no major losses, maybe very seldomly taking major losses on dip buying, but all of my biggest losses are on breakout buys, right? Getting faked out. So going through, right, if you buy the breakout and I bought the dip, I'm selling to you, right? You end up being the liquidity. This is not always going to rip up, right? The market is unpredictable. You can react to it, but I wouldn't say that anyone has a complete grasp on what the market will and will not do completely. But you can surely break down the price action and get a better kind of thesis developed. Yeah, what's up, Kimchi? Also, right, I kind of want to touch on the psychological aspect of trading. I know a lot of traders struggle with this. Charting is only 10% of it, guys. You guys are not going to get better just charting at night. You have to be able to understand the emotions experience throughout the day and what they kind of correlate into in your life. So what I mean by that is, generally myself, I am an angry person. I'll be honest about that, right? I've been honest about that for a long time now. I will, kind of take it too far at times, and I need to be able to understand that in regards to my trading, right? Because if anger really, starts to sprout out, revenge trading, over trading, right? Not stopping out, being stubborn, stuff like that. So there's a lot of derivatives from those emotions that you need to be able to understand that, hey, maybe if you are an angry person, it will create many more problems in a snowball effect. If you're someone who's fearful, right? Someone who is anxious, you may experience, lack of confidence in your trades, right? The hesitation of pulling the trigger on a trade, even though you have identified a proper dip entry, you may not take it due to the fact that you are an anxious person. Maybe you're timid. You don't have that, that confident built up. Dill says trading single contracts with small account scaling. Perfect, right? This is also on the list for me of things for me to cover. So let's say let's say that you bought this dip. Okay, remember we said, hey, if you get a higher high break, this is where you should be scaling out, right? But if you're only trading one contract, your goal is then to scale out by moving your stop up, right? You're not truly going to scale out. You're going to move your stop up. So what I mean by that, okay? It's on my Twitter, Noah. You might have to scroll through it. I don't want to post my Twitter in Atlas, right? Going through here, you buy the dip buy. This is where you would scale out, right? But what you should do is just move your stop up. What are you going to move your stop up to, right? You got your higher high. Mark your pivot point, okay? Move your stop up along the way. Okay. Oh, breaks up again. There's my next stop loss. There's my next stop loss. And my next one. Right? And my next one. You're still in the trade. This is not, you still got your one contract. Move your stop loss. Move the stop loss up more. Move it up. Oh, okay. It kind of breaks down a little bit. It does get bought back up, but then it knifes, right? You then have taken the trade, not, from getting all out here to taking your one contract all the way up there, right? So you're getting 357 practically all the way up to 359, 2 more points on the Qs, right? Now, depending upon if you use the 9 and the 20 EMAs, this may have scared you, but you would have seen on the 10-minute that was a dip entry, right? A lot of times when you guys scale out on a dip, you see the first red bar in a green trend, you scale out, you're just giving your contracts or your shares to the next round of bulls. But remember, what's the rule? Later entries dictate quicker profit taking. Where do you take profit? On the higher high pivot break, right? This is where you take profit. If you did not take profit, you get knifed on, you get punished. Don't be greedy. Understand that later entries on extended charts, you have to scale out quicker, okay? I do not stream on Twitch every day. I stream about once a week on Twitch. And controlling emotions, I'm a big, advocate of, documenting my emotions throughout the day. And the reason why I do this, does the trailing stop loss work? Yes, of course. I use a mental stop. I never use a hard stop loss. It gets me wicked out. And if I do get kind of dumped on, then, I take the tag and I move on to the next trade, right? I can't sit here and mope and grind about it, right? Or mope and whine about it, right? I just move on to the next trade, knowing that with my system, proper risk management, even if I take a loss in one trade, the next trade, if I'm able to ride that winner, it will pay for not only that loss, but also build the account. But I'm a big advocate of documenting emotions throughout the day. You guys should have a, kind of, I guess, scratch pad, notepad, whatever, digital notepad on your PC or whatever, to allow yourself to document emotions depending on what time of day it is, right? Documenting emotions on what kind of trade you took. Hey, I took a breakout trade and, I'm frustrated by that because the breakout trade failed, right? And then you'll start to see that pattern. Hey, every time I take a breakout trade, I'm frustrated. I experience anger. It leads to over trading, right? So what is the cinch, right? You need to be able to remove the breakout trading, right? Take a different approach. Maybe you're someone who struggles trading the open every day and you document emotions experienced throughout trading the open. And due to that, right, you understand that, hey, I'm a weaker trader at the open. Maybe I need to cool it off, let some, price action develop so that I can, base some kind of setups or, chart some technical analysis, anything like that, right? So let's say you didn't trade the open. It gave you this demand zone, right? You wait for price to come to the demand zone. You don't want to go long up here. Sure, it does work out, but that is the anomaly that it works out. It will not always work out. Do with what's consistent. What is consistent is, hey, I buy here. If it breaks below this, I never stop out right on the level. I leave a kind of area beneath the zone for me to stop out, gauging the strength of that shove through, right? You guys have seen fake out breakouts plenty of times. And going through here, right, I would rather take that trade in this demand, and if it stops me out, it stops me out, right? That is a good trade. Why is it a good trade? Because 1, I've identified my entry. 2, my exit would be VWAP. Of course, anytime you're under VWAP, price tends to gravitate towards it. It's a great area to scale out or move your stop loss up, as well as, respecting risk. I've identified risk and I know that, hey, if this level fails, then I will stop out, okay? Quality of setup. Wait, examples of quality setups versus bad quality setups. Okay. So, let's see. So we've been talking about supply and demand zone, supply and demand for a while now. You can mark support, right? If you wanted to buy close to that support, that's fine, but gauging price action. Okay, you have, yes, a horizontal support, but what's just happened? Your higher low failed right there. Gauging price action. You see not a ton of time spent over VWAP, and when it does break below, it breaks down and bases, right? So like I just talked about in that demand, yes, you should take entries near demand, but only if price action tells you to, right? You can see that this big bearish engulfing candle, another bearish engulfing candle, and one more bearish engulfing candle, that shows a strong sense of short perspective or short momentum, right? So that means that, hey, these sellers here, they're probably going to stop out. They don't want to take the heat from that or this big knife down. So when it does interact here, you see when it shoves down and you see dojis here, that is the decision being made by those buyers who bought this large bottoming wick if they're going to stop out. And once they do stop out, remember, this is not shorts. These are not shorts shoving this down. This is that buyer stopping out, or the series of buyers stopping out that adds to the momentum. Your job as a seller is to take the entry, maybe on a pullback, right? VWAP or 9 and 20 EMA pullback, and holding through this, scaling out, right? Offloading risk, maybe moving your stop loss up, gauging the EMAs, but not reshorting here, not adding to your position. You want to see if sellers stop out. Once they stop out, you are selling, right? You are getting out of your puts, right? Or maybe you're covering, you're buying those shares back, depending upon, right, if you're trading commons or contracts. I went over that earlier in the review, how to identify supply and demand. I'll go over it once again, right? We'll just go over today. Two things that I like for supply and demand. I need to see large bottoming wicks, right? You could have marked that initial wick, extended that out, right? Small tight body consolidation prior to a large move down, okay? Or this large upper wick, right? See that supply and demand. Also, we can go through another example here, right? Small tight body consolidation in pre-market prior to a large move down. Remember, if you're trading options, you can't trade in pre-market. So you would get this supply zone here right off of the open, right? You're waiting for price to interact that. If you have taken a dip buy and you're long and you're approaching a supply zone, it's always best to protect yourself, protect your capital, build your account, and lock in profit here, right? This is also a great area for what? For shorts to base risk off of, right? Pre-market high. If you took a short here, right, your stop out, maybe you've left room to average down on your position in your short or your puts, right? But your stop loss is the pre-market high. Two things are going to happen. You're either going to stop out or stop out if you're trading puts, or the trade is going to work out in your favor because that level is respected, okay? When I take stops, it's really dependent upon, the level. I typically am either trying to sell on the bid. If I don't get filled on the bid, I will market sell, right? A lot of people have trouble market selling this or that, right? It's really only on illiquid things or if you're oversized. For the indexes that I trade every day, I don't see too much slippage, actually. How many trades do I take each day? I take, for day trades, I've been trading for quite a while now, right? I trade every single day. Live stream trades every single day. I probably take 10 to 15. Yeah, I use mental stops. That's right. Okay. 1 second. One moment, guys. Let me fix something real quick. If you guys have any questions, right, I haven't been in the chat. I'll take a few questions while I fix this real quick. It doesn't really do anything for me, right? I am no different from many of you guys. Silent Hill says, how does it feel to be that you are one of the goats on FinTwit? I'm no different from many of you guys. You guys all have the ability and skill in order to become a profitable and independent trader, right? The game of trading is longevity, right? I tell everyone this. It's not about getting rich, right? It's not about making the quickest amount of money in the shortest amount of time, right? It's about base hits. It's about keeping your seat at the table. The longer that you are able to trade, the better you will get, right? Trading never gets easier. You just become better. Trading just may become simpler, right? Understanding it. But you guys all have the ability to do the same thing that I do, same thing the PJ does, same thing that everyone else does, right? You just have to give yourself time, dedication, and commitment to this, right? And don't allow yourself to be put in bad situations, right? I focus on having good interactions and experiences in the market. I know that, hey, on the small account affirmations I talk about, hey, I know the difference between good, bad, and excellent, right? I know that when I take a FOMO trade, as soon as I enter that FOMO trade, I'm like, this is probably not going to work out for me, right? And then you get that gut feeling, and then it happens, and then you're sitting there like, oh shit, okay, on to the next time. I won't do that, right? Allowing yourself to understand these experiences and, think that, hey, maybe I should have just waited on the dip buy. It did end up going to my thesis, but I was too eager, too aggressive on that entry. What I recommend for beginners, you guys should be trading one contract at a time. And smaller the account size, the better experience you will have in the long run. A lot of you guys are asking me, dude, you crack me up. I'm not gonna get into it. But going through, right? What was the question again? You guys should be trading one contract at a time, right? Practicing proper risk management is getting as close as you can to a risk level, even if that risk level stops you out, right? It's a good trade because it should have been a tighter risk, as well as, the smaller the account, the better. I see a lot of traders asking me, hey, would it be better for me to deposit 10,000, 15? Should I deposit over $25,000 for options trading to get over PDT? You do not need to do that, right? It is best for you as a day trader to trade $500, $1,000 account, learning the ropes, maybe paper trading, right? Using the least amount of capital, risking the least amount of capital while you are learning. You're not going to get rich while you're learning. And if you do, you're not going to know what to do with it. I've gotten plenty of DMs, hey, Maple, I've made 150K off of, GameStop or AMC or whatever it was, and they piss it away and they don't know what to do, right? You should have paid yourself, right? Just because you have more money in the account doesn't mean that you're going to make more money. 3 books on trading. I like Trading in the Zone and Anna Cooling's VPA books. The 2. Let's see. Yep, that's right. Oh, and with the cash account, right? You guys don't have to be over PDT 25K mark in the US to day trade options, right? It is a one trade. What is it? T+1, right? Trading kind of settlement program for trading options. So let's say that, hey, I buy long here and I scale out near or over VWAP, right? Let's say that I use, $200 for a contract. That $200, let's say it turns into $250 on the push up. That whole $250 will be settled the very next day. So it's like a cheat code or a loophole around PDT. Whatever you trade will be settled tomorrow, depending upon if there's no holiday or anything like that. No, they're not mostly scalps. I do scalp, but I love to hold riding EMAs. Like if I go through a lot of my entries, like the other day, let's see, we took AMD 125 calls from 215 or 195 to 2.8, so that was $85 a contract. I also took 354Ps from 2.7 to 3.7. That's $100 a contract. Another trade here. They get kind of crazy, especially on trend days. Trend days are wild. We took this one, 359P from $1.38 all the way up to 3.8, right? So $140 a contract last week. So do I use trend lines? Yes, but I cannot stress this enough, the importance of horizontal trend lines over diagonal trend lines. I do like downtrend breaks and supporting trend lines, but the key levels are always going to be horizontal, right? You could have, yes, capitalized upon the downtrend break here before FOMC minutes, but it was kind of a gamble because we didn't know what was truly going to happen. Yes, I live trade every single day in I post a lot of calls and EDU in Atlas, but I do day trade in my own Discord every single day. Going through here, has to be cash count. Trade review process, Booker Trade says. So for you guys, if you took a trade on the Qs or SPY, whatever you traded today, clear the chart out completely of all TA, all notes, everything like that. And I want you to go back into your order log, okay, and place your entries and exits, right? You guys have heard this term or this saying, hey, in hindsight, the chart is 2020, right? It's all so simple and so obvious in hindsight. So in hindsight, you should place your entries. What you will see is a lot of traders making bad trades in the wrong direction, right? Trading in the middle. If you see a lot of your trades are in the middle, okay, compared to the obvious trends, right? This demand zone or this supply zone, right? All of this in the middle, diddling in the middle, no man's land, right? This is where you get chopped up. A lot of traders don't understand how to trade the chop. It's because they're not zooming out and pacing their trades. Where did I learn all of the technicals? I started learning them. I started off on a lot of Reddit forums, just, reading through Reddit forums. Everyone starts somewhere, right? You guys probably, saw something on YouTube or Instagram, whatever, or, maybe, you're in a Reddit forum like a lot of us, and just going through understanding support and resistance, right? I learned a lot also in the momentum floor. Before it turned to momentum floor, it was scalp team. I posted a lot of charts in there that helped me out in my review, as well as you guys. You guys have probably seen a lot of my chart reviews and how I chart them through the night, and just to prepare myself for the next day. So going through here, mark your buys and sells on the completely clean chart, right? And then after that, chart it, right? See what was obvious, what you missed in that trade, noting indicators, right? The relationship. Where's price in regards to VWAP? Where's price in regards to the 9 and the 20 EMA? What about supply and demand zones? Where was your entry? And was it a good or bad entry? Okay. Someone says, how do you know if you're wrong, if it's the market makers coming after your position? So, one thing that I like to do, okay, is this. Okay, this is from Live Traders on YouTube, right? I've used it for over a year now. I teach this, and we have great success with it, right? It's called the 84% rule. I've made a YouTube video on it as well. But you have a support. Let's say that you had this demand zone drawn out. Let's say that you go long here in this demand, right? You keep it too tight of a stop. Maybe you have paper hands, anything like that, right? Too tight of a stop loss, stopping out right on it. So you stop out. Maybe you have a hard stop, right? The 84% rule says that if price comes back to your entry, you should take it, and 84% of the time it'll work out, right? So what I mean by that is this. So you take this, you take your tag, you retake the entry right there. The same thesis. You were buying calls in this demand because you wanted it to be respected, right? Your thesis was correct, but maybe your execution was poor. Possibly, right? Paper hands, weak emotions at that given time, kind of frantic selling. You maybe thought it was going to knife, something like that, right? There are plenty of other, kind of instances where this does happen. Like let's say, for this instance right here, let's say that you take a short here in supply, or you buy puts, right? Whoops. Or you buy puts, right? So let's say you enter here. Whoops. You enter here. You get scared because the high of the day breaks. Maybe you have a hard stop like we talked about, right? You get wicked out. How many times have you guys get wicked out above or below a zone, or below or above a support or resistance level, right? You get wicked out. Market maker stole your commons or your contracts from you, whatever, right? Then you just sit there and it reverses on you, and you just watch price action the rest of the day. You just watch it. You don't make money on it, okay? So what do? The 84% rule. Learn to use it. Try it out this week. Try it out next week. Whatever you can do, right? You take your initial entry. You get wicked out. You retake the entry. Once price comes back to your initial entry, maybe you get a little bit below, but your thesis was correct. The execution was poor. Yeah, I do have here, I can show that as well, right? I'm huge on education. You know, I get a lot of shit, but, you know, I don't really care because they're all full of shit. But these are all of the live sessions that I have, right? All of these live sessions, all of these videos, about an hour long, covering over my ideal strategies and setups, right? So a lot of people think like, oh, you know, you just pump this or that. You know, they're full of shit. Um, let's see. But going through, I also, let me finish up my notes and then we'll wrap this live session up. If you have enjoyed this live session or want more of these, you know, let's see if you guys want to type a 1 in the chat, we can do more of these in Atlas, right? Host these. PJ wanted to include more, you know, kind of EDU in the group. I know a lot of, you know, small cap traders are struggling right now. And even PJ, you guys will see him in the large cap options kind of channel, right? He kills it in the options. It's the same technicals, guys. Large cap options, you guys are, the technical analysis is much more respected in the sense that, you know, all of the TA brought over from small caps originated from large caps, right? What do large caps have that small caps don't, right? Consistent volume and liquidity. Okay. So, you know, going through, I've gone over setups, 84% roll, tweezer tops, bottoms, intraday supply and demand, moving stop loss along the way. I've gone over that. Pretty good there. Okay, so I have this, right? Faulty emotions, right? Emotions that traders may experience due to the fact that they're new, right? Or they don't have a true understanding of their own emotions at that given time on their trading journey, right? So they will experience anger, fear, greed, anxiety, and confusion, also lack of confidence, right? The list goes on. I'm sure there's plenty more other emotions that are experienced, right? But all of these are inhibitors, right? But emotions you must learn to deal with. You will experience these emotions no matter how far you go on your trading journey. You're never going to prevent yourself from a major loss. You see a lot of elite traders, no matter the account size, no matter the experience, that big loss is looming around the corner at some point. And that big loss, every time I experience that, I have a sentimental kind of connection or respect to it because it grounds me. Hey, you know, you're not a perfect trader. You need to refine some things, right? You messed something up. You missed something, right? Do better and be better. So, you know, never think that you will master trading, right? You will always look and find areas to improve upon for trading. And, you know, always be a student, always be open-minded. And, you know, we can all learn from each other, right? I am younger, right? I'm 24 years old, but, you know, I trade up there with a lot of the guys who have been trading 10, 15 years, right? And I have a very different kind of strategy or style than they may have, right? And that is only simply developed due to the fact that of the market conditions that we have traded, whether it be, you know, poor market conditions or strong market conditions, right? Tough markets build tough traders, and you know you should be thankful and grateful for these kind of tough, you know, intraday price action because you know this is not normal. Okay, the queues are built to move up, right? Good quote there from my friend Dr. Bullshark, right? The queues are built to go up. Of course, it's an index. They have holdings in there that should perform well. Right now, there's a lot of fear and indecision in the market. You know, COVID supply chains, a lot of things like that are, you know, it's just and inflation. There's just a lot of things, geopolitical matters, right? This is not normal. But when we do get simple trends, when it is trailing on the 9 and the 20 on the daily or this or that, and we're not going through small doji indecisive candles, consolidation, chop, right? You will be thankful for all of the skill sets that you learned and, you know, taught yourself trading this day in, day out. I don't use the strat. I do look at inside bar plays, but I don't really trade them. I feel like inside bar plays are, you know, they're just breakout trades, right? Trigger level for short, trigger level for long. But you can really get better entries before those triggers are hit most of the time. Um, let's see. Do higher time frames influence your intraday trades? So yes, they do. Before open each day, I will go on the hourly and mark out supply and demand zones, right? So if I clear this out completely, whoops. You know, you can mark supply and demand, right? You can see very clearly here, large bottoming wick, right? This was that demand zone. This was the reason it was respected. Small tight body consolidation right here prior to a large move down dictates a supply zone, right? I marked this little small consolidation prior to the dump, extend it out, supply and demand. This is respected. Let me extend it out a bit more, right? Until what? It's consolidated under and broken through on the intraday, right? You can also, like for today, before open, this was that supply zone on the hourly from pre-market, right? We also had previous day high supply acting as demand, broke above and based, okay? Also on the intraday, right? Large upper wick there, acting as supply for the time being. Nice shove down. That was that hidden supply zone that I noted earlier. Shoves it right into demand. Great trade for the zone to zone trade. I do use daily levels, right? I talked about here on the Qs. Here, this was a daily high, right? Let me clear this out once more. This was a previous day high, or previous daily level. And this is previous day support, the day prior support. These two support or daily resistance levels or support levels acted as demand for today. But I think that I'm gonna wrap it up here, guys. I do appreciate all of you guys giving me your time and following along. I hope that you guys learned something from this. This, of course, will be uploaded to my YouTube channel and on the Twitch VOD to keep up. It'll be up for, I think it stays up for like 60 days or something. But we'll do more of these sparingly. I'll probably try to do one once a week or at the beginning of the month or something like that, right? But I'll try to post some of my, I guess, options trades in the Momo floor, the momentum floor, as well as I don't really post too much on Twitter, right? But once again, I hope that you guys enjoyed the session. Hope you learned something. I hope that this is helping any of those traders out there who are struggling with the current price action, right? I want you guys to know this, okay? You will experience the emotion of wanting to quit, right? You'll get so beat down in your account that you're just like, maybe I'm not cut out for this, right? I've been there. I've been there not only one times, not only 5 times. I've been there probably 20 different times along my trading journey, right? But every single time after that, I am grateful that I did not, right? It pushes me to not quit. I know that other traders out there, even if I do quit, right, are going to continue to do this, right? And that's what's pushed me to be the independent and successful trader that I am today, right? We go in day out. I don't care if it's, trend, range, chop, consolidation, right? I understand price action and know, where I need to be in this trade, as well as respecting risk. Even if I take a trade and I stop out on the trade, as long as I respect my stop loss, I know that in the long run, I'll protect myself. So also that, yep, there you go, Agent Smith, right? 12, never give up. That small account affirmations is on my Twitter. Try to dig for it. I'll probably post it in Trader Chat if I can. But once again, thank you guys. I will hopefully you guys have a good day in the market tomorrow. Remember, if you're new to options trading or trading small caps, right, you do not have to master small caps in order to trade large cap options. Yes, the information and just getting the ropes behind trading, maybe understanding your how to operate your broker or brokerage account or anything like that will help. But I know plenty of traders who dive straight into options, focusing on proper risk management, and have done very well, right? So don't look at it as overly daunting or something that you should be fearful of or anxious about. The biggest difference was the options chain, right? Understanding the relationship between volume, theta and delta, and understanding, going long on downticks and going short on upticks. A lot of you guys love to FOMO buy, but it never works out for you. And if it does, then you think in future situations that it will work out again. And that is not the truth. It will reverse on you. And that is the anomaly, right? What is consistent is it not working out. So once again, I will see you guys all tomorrow. I'll catch you guys in Atlas or in my Discord, right? And I hope you guys enjoy the rest of your night and take care, right? Drink some water, stretch, eat some good food, and we'll do more of these later.